Hello, fellow Rebel Capitalist Substack subscribers. Hope you guys are doing extremely well. Looking forward to this week. We got Rebel Capitalist Live. For those of you who are joining us in Orlando, I will see you this Friday at the cocktail party. Going to be very, very exciting. Got some incredible speakers. But let's get into last week's events that I've really been paying attention to. The first thing we got to talk about is consumer sentiment. I hear a lot of podcasters and market analysts, talking heads on CNBC talk about how great the economy is and how it's the whole strong and resilient thing. You know what this reminds me of? Before I ever got into macro, this was before I retired. This would have been, I retired in 2012. So this would have been maybe 2011 or so. I remember I was living in Washington, D.C., Maryland, just outside of D.C. And I wasn't really, I mean, I was nowhere near into markets like I am now, but I would pay attention every once in a while. And I would notice the shares for BlackBerry. Remember BlackBerry? I remember they were like, I can't remember the exact price, but like $80. And I remember reading on CNBC.com or something like that how, a lot of the traders are bullish on BlackBerry. I'm like, who the hell uses a BlackBerry? Like, what? Like, I haven't used who uses a BlackBerry anymore? Like, everyone uses an iPhone. Everyone knows that. But then I went to New York a little while later, something like that. And I went down on Wall Street and everyone has a BlackBerry. Like every single one of these traders and every single one of these hedge fund guys and all the CNBC types, they've all got their BlackBerry. And it dawned on me. I'm like, wait a minute. These people that are really moving the markets and talking about this stuff, they're living in a little teeny weeny bubble. And in their bubble, everybody's got a BlackBerry. But if they just get outside of that bubble, they see that for the United States, 99% of the people in the United States, they're not using a BlackBerry. Like, what are we talking about here? That's nonsense. They're all using an iPhone. And so I thought, man, if I was a trader, or if I had a stock, I don't even think I had a trading account back then. But if I had an account, I would probably figure out a way to short BlackBerry because it's obviously just a result of these people living in a bubble. And if they were just step outside that bubble, they'd see ain't nobody using a BlackBerry except for you and your buddies down on Wall Street. It seems to be something very similar right now with the real economy, where if you talk to the New York Wall Street types, the financial types, the hedge fund types, they're like, the economy's doing great. The economy's boom. Just look, everyone around Wall Street, everyone's going to $500 dinners. Everyone's driving an Aston Martin. Everyone's got a Ferrari. Who the hell is complaining about the economy? What, just stupid sour grapes, or people are just trying to sell their Substack subscriptions or whatever. I love when they always do that on a podcast. Whenever anyone is bearish, the only reason you could possibly be bearish about the U.S. economy is if you're selling Substack subscriptions. Like, look, if you're ever trying to debate someone and you want to sound intellectually weak, just go ahead and just immediately say that your opponent, dismiss any intellectual argument they have by just saying they're trying to get clicks or views on YouTube or Substack or whatever it is. That basically what you're doing is you're saying they have an honest argument, they have a fact, data-driven argument, and I don't know how to respond to it. But I know that I'm a bull and I have the opposite opinion. And since I don't have any data or I don't have any facts to dispute what they're saying, I'm just going to do like a character assassination against them just because I can't respond with anything intellectual on my end. It's just weak argument, right? And by the way, I've met almost not every person, but And what, 90% of the people that are in this space that sell gold or Substack subscriptions, or even me, I mean, what do? I sell subscriptions on Substack. I sell Rebel Capitalist Pro, Rebel Capitalist Live, etc. But I've met all these guys at conferences and gals. And I can honestly say, no matter what their business is, no matter what their view is, I haven't met one person that says what they say just to sell subscriptions. Like, everyone accuses Schiff of this all the time. And I know Peter pretty well. And Peter, look, he's always selling gold. Got to buy gold, got to buy gold, got to buy. And everyone says, oh, he's just telling you to buy gold because he owns a gold company. He doesn't really believe that. No. You don't understand. Is Schiff always selling gold? Yes, he absolutely is. Even at dinner, when the cameras aren't on, he's still selling gold. But he's not selling it to sell it. I can assure you, Schiff believes every single word he says. It's not a sales pitch. It's not. He truly, 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 truly believes it. Any one of them out there, any of the gold guys, Bitcoin guys, I have my doubts about Saylor, but I've never really met him. But anyone that I've met, no matter whether they're selling subscriptions, bearish, bullish, whatever it is. Actually, you know what? I take that back. I have met some of the bulls, and they're the ones that are saying what they say just to sell subscriptions. All the bears, I've never met one that is like, oh, well, I'm really, really bullish on the economy, but, that doesn't sell. So just an FYI. So getting back to the point here, it's looking at consumer sentiment and trying to figure out, like, what is really happening with the economy. Because obviously the stock market is not a proxy. If anything, it's an inverse proxy for what's happening in the real economy. So when you look at the number, now I'll be the first person to admit that I'm bearish on the U.S. economy. That's for sure. But it's mixed signals, right? It's not like every single data point is just wildly bearish. It's mixed. So I thought last week was interesting because you got the consumer sentiment, which is horrible, horrific, which you would expect with gas prices going to whatever they are, $4 or $5 in the United States. But then you've got some numbers that are decent, right? But what we have to do is we have to weigh both. And we have to say, okay, what's really happening here beneath the surface? And what does that mean for macro? And is that something that's even actionable at the end of the day? So let's get into what I'm talking about here. Let me do this.